Hello everyone, welcome to our session. Today we are going to share our experience on migration of Fidelity's trading platform on AWS. And I'm Sashi Gupta from Capgemini. I am based out of New York City and I run AWS Center of Excellence for Financial Services BU of Capgemini, which supports our financial services customers across the globe. One of our strategic customers is Fidelity, which is a large American multinational financial services corporation based out of Boston. This is our 10th year in the partnership with Fidelity, and we are very excited to be a part of Fidelity's strategic initiatives, which includes emerging technologies like migration to AWS and building trading applications on AWS. To share the scale and sensitivity of trading applications, let me take you back almost an year and a half in March 2019, when US market reacted about the inverted yield curve and there was a panic about recession. Well, it all got corrected in a couple of days, but these yield curves and market react a lot on repo trading business, which is a vehicle for an overnight lending of money. And it's estimated to be a $1 trillion business per day in collateral value that is transacted in the US trading repo markets. That's the scale of complex applications that we are working with Fidelity to migrate to AWS. These trading applications doesn't change their core architecture or platforms so often. And we are witnessing a one of the lifetime opportunity to migrate such large and very complex systems to AWS. And to be a technology partner for such complex workload migration requires a lot of work. At Capgemini, our AWS mission is to build a very sector-focused solution that is addressing a special business need. We understand the capital market domain and we leverage AWS as the platform of choice for such complex workload migration hosting. We have achieved various competency status with AWS, which is a reflection of our core solution approach and how we are helping our customers on their AWS journey. With that, let me invite Robin from Fidelity to share his views on migrating Fidelity's trading platform on AWS. Over to Robin.
Hi, my name is Robin Wilson. I'm the leader of the Money Market Tribe in the Asset Management Division of Fidelity Investment. I've been chartered with leading the program to move all of the applications for the fixed income division that also includes high-grade bond to the cloud from our on-premise database. I'm sure many of you are facing some of the same challenges that we did back a year ago when we started our program, specifically tech obsolescence, active business projects, and the unknown. So moving to a new way of designing, deploying, and supporting mission-critical systems in the cloud is a pretty daunting task. So if you're just hearing about landing zones, cybersecurity, elasticity, cost measurement, you're where we were roughly a year and a half ago. So I'm here today to tell you about our journey to Amazon and the processes we've used in our cloud program and how Agile principles have helped us break this larger problem down into smaller pieces. But before starting, I'd like to give you some context on our value proposition and how we get started. For Fidelity, at the corporate level, the value proposition of the cloud was well established by the time we get started with our program. The business case had been developed, and the message from senior management was everybody must go to the cloud. So for our program, aligning with that central vision was just an added benefit and one of the drivers. We are also looking at the flexibility associated with going to the cloud, not just from capital expenses to operational expenses, but the ability to bring on hardware and increase capacity and reduce capacity as needed is much faster and more simple in the cloud. If you think about a project on-prem and you're bringing in new applications that need new hardware, there's a long lead time to order the new hardware, get involved with the data center, and ultimately make that happen. In the cloud, it just happens overnight. Right? We also know that most of our stakeholders are already moving to the cloud as well. And for us to be able to continue to integrate quickly and easily and securely means that we need to go to the cloud as well. And cost, yeah, there's cost components, but ultimately that's not a big driver. It's really when you go to the cloud, not if. And we're taking advantage of an obsolete data center to help us move, and that's a precipitating event for allowing us to start with our program. And once we're there, we'll have the ability to take advantage of a rich ecosystem of capability that's only available on the cloud. So with that target in mind, 100% of our applications need to go to the cloud by 2022. We looked at that as an opportunity to unlock the future, enable digital strategy, machine learning, artificial intelligence, attract and retain talent. So in addition to being a mutual fund company, Fidelity is also a technology company. And our engineering staff is very excited about learning about the cloud and the new positions that we have that are cloud first. The amount of interest and the great candidates that we get is much better than on-prem positions. Flexibility and stability. So we talked about the time to market to bring on capacity. Well, we also know that we have redundancy that we can build in much more cheaply. We can roll up new versions of our applications in different regions quickly and easily. We also get out of the business of managing our own data centers, which is very expensive and requires special skill sets. And ultimately, cost reduction. Again, that is something that we think we get some benefits out of, but ultimately, I don't think personally that's the primary driver of the move to the cloud. So just think a little bit about our goal and what it means. So basically, we're moving from 2 data centers geographically located in New England to 2 Amazon regions in Raleigh and Ohio, and ultimately moving all the capability necessary to support the fixed income division to those locations. So if you think about what that means, Sashi talked about the repo business and money market and how complex it is. Well, everybody thinks that it could be a sleepy sector, but same-day settlement and the sheer dollar volumes, that requires a massive amount of technology and an integrated set of capability that has to move. So we have over 160 individual pieces of software that need to go from the on-prem data center, to the cloud. We also have the effort of retiring the 2 data centers, and that's complicated by the fact that our systems are fairly old. We have some of those pieces of functionality have been in place for over 20 years. There's a lot of technology debt that has to be addressed prior to moving to the Amazon cloud. Just to give you a little bit more color on the complexity of what we're facing. So most investment advisors have portfolio management and market surveillance to keep track of what's going on in the environment, and trading capability that they have to support for the specific sector. But what makes money market unique, at least at Fidelity, is that division also invests all the cash for the other mutual funds. And the cash management component that goes along with that is very complex, requiring integration with the transfer agents, the back office, and all of that has to come together into a seamless, integrated workflow. So with that in mind and the tasks and what we had to take on and why, we stepped back a little bit to think about our approach. We wanted to make sure we didn't get lost in the weeds and make sure that we had ongoing success once we moved to the cloud. We need to learn from the software industry, look at the on-prem pain points, and think about how to leverage the benefits of the cloud. For us, one of the biggest problems we had is a large investment in legacy SOAP services built in a monolithic way, shared by multiple applications. So what we wanted to make sure that we learned from the challenges that we had on-prem, sharing runtime on Tomcat, and we wanted to decouple our runtime environments Again, that's a stability and flexibility opportunity, and decouple our deployments and our release management. We don't all have to test and release software at the same time because we're all going to the cloud. We also recognize the fact that we needed to process re-engineer and adopt CI/CD and more automation to be successful. And we knew that once we got to the cloud, our support organization needed to go with us and be able to support our applications in the cloud just like they do on-prem. So with that in mind, we stepped back and we thought about our shared services team and the future state. We had decided to adopt the microservice model and have that team also be our center for all the teams going forward, for release management, be our center for the DevOps culture. We wanted to make sure that we governed our software in a good way. We took the complexity of sharing in the runtime environment, we pushed it downstream to the software environment. And mainly being able to manage versions of software and the like, we wanted to adopt the InterSource model and the principles there. And if you're not familiar with InterSource is really just open source at a local level. And we also knew that there's some amount of capability that we couldn't deploy independently. It had to be shared in the runtime environment, and we wanted that central team to manage that as well. Just a little bit on the InterSource model. Really, we want all of our code managed in that way through the governance and the structures that are there. We wanted to make sure that we had consistency and quality of software as part of an ongoing engineering excellence drive. And we wanted to make it easy enough for teams to come in and start in the InterSource model as opposed to having the governance structure too heavy and too restrictive to ultimately impede our progress. So taking the problem a little bit further, what are the standard tools and how did we want to, break that big problem down into smaller and smaller pieces? First, we focused on work intake. We got to that 160 number of applications that move into the cloud through many iterations, inventorying, evaluating, understanding, making sure that we had one entry into our project and that we had consistent oversight and scope about the work that we were taking on. The next was really looking at our source code management and code quality, making sure that we had the tools there, refactoring our source code repositories, establishing net new source code for the cloud, leaving our on-prem code behind us, and then getting into continuous integration and taking advantage of our existing investment in automated testing, taking that to deploying with the continuous deployment capability, and ultimately recognizing that security scanning is a prerequisite for deploying software. Right? So we don't have to do a lot of that internally. It's, we get the benefit of a central team providing our pipelines. That's part of Fidelity's investment at the center. And but that is a change. And that's a change to how we think about deploying software and making sure that we include the security restrictions or account for that day one when we're building and deploying software. So with that in mind, all of that got down to, okay, now we understand the problem, we understand the tools. Like most technology problems, we can break that down into three components: process, people, and technology. So for process, we wanted to follow CI/CD. And I won't bore you with a well-established CI/CD model. A lot of information is available for that on the web. But ultimately, the thing to take away is that going to the cloud is a fundamental process re-engineering effort. You lose your boundaries of the physical servers, and you have to keep track of your assets. And in order to do that, you need to adopt a configuration management database and think about that as the core of your capability and your processes going forward, not just in the sense of idle, where you keep your assets in your configuration management database as a kind of a secondary effort after you've deployed. In this case, we want the configuration management to drive our deployments, and we want our deployments to also have a feedback loop and keep our configuration data accurate and reliable, and use that data in all our processes. So not only are we going to get more leverage and benefit from that investment, but we'll also make sure that that data is accurate because we're using it day in and day out. Now, on the people side, the first thing we really kind of acknowledge is this is all net new. We're going to be learning. It's going to be difficult, and there's going to be issues that come up on a constant basis. And we embrace that, right? And how do we set up the structures to make sure that we can deal with all the decisions we have to make and communicate out to the rest of the group? And we decided to follow some scaled Agile principles. And we established, a core team that met daily that we call our safe team. And we use that team to help guide and, work with a series of Scrum teams, following Scrum, Agile, and ultimately having that come together in a big umbrella, right? And this is where Capgemini was brought in to help us. So not only were they able to help us in the capacity state, but they have deep expertise and helped inject that into our overall organization. And ultimately, within our core team for the money market part of the project, we have teams from Capgemini, teams from Fidelity. We're all working together on the same project. And then through the structure, we can also provide guidance and input to the extended team that includes teams not directly in money market, but are part of the fixed income division. And then outputs, standards and best practices, code that's going to be migrated to the cloud, our microservices from the shared services team, and ultimately leading us to business adoption of cloud deployed applications. Now on the work side, technology side, ultimately we wanted to follow the guidance from Amazon and utilize the 70-20-10 rule. So 70% of our capability will be lift and shift, just push to the cloud. 20% will be re-architected to address legacy issues on-prem or take advantage of things in the cloud. And then 10% of the capacity we would just decommission. So we broke that down into to kind of swim lanes. So there's the basic remediation. How do we make sure that we're ready to take an on-prem application that's been around for a while, remediate its tech stack, be ready to take that to the cloud? Migration, that's the mechanics of building the pipeline. And again, we were able to benefit from a central team providing us with that pipeline. We just needed to orient around that capability, making sure that we can push our application to the cloud. Some subset of our applications, we realized were either not ready to go to the cloud or capable to go to the cloud, or needed to be refactored to address business changes and take advantage of the scalability and elasticity of the cloud. And then we basically had to stop development on-prem. As soon as this project started, there was no sense continuing to invest in on-prem if we were moving to the cloud. But regardless of how the application was initiated, going to the cloud in a production environment, it all had to be consistent and follow the same standards and best practices. So that gives us basic building blocks. It still doesn't get us to the point where we can execute. Right? And one of the fundamental challenges associated with Agile and Scrum is that when you have empowered autonomous teams, trying to get them to work together, it is hard, and you need a lot of effort and oversight to make that happen. And to help solve that problem, we took another concept out of the scaled Agile playbook and adopted Agile release trains to help do the detailed planning for our projects. We broke them down into deliverables. We made sure that each Scrum team knew what part they were taking on, and ultimately it came together into a set of deliverables that we could manage and monitor. But just getting things to the cloud, that's not the end of the story, right? And we have an integrated workflow, so simply as sequential, move to the cloud, adopt application by application wasn't possible. So we split the problem up into smaller chunks, allowed us to focus on one chunk before trying to plan the next. So we broke down each application by the migration part. Just get it to the cloud, app remediation, pipelines, etc. Once it's in the cloud, we're currently investing in the capability to be able to validate the results coming out of the cloud version of the application, match what's coming out of the on-prem version. This is another reason why you probably don't want to do a lot of re-architecture when you move to the cloud. You need to make sure that you're getting the same results in the cloud and on-prem. It eases adoption. And once we're comfortable that one component or subset of capability is ready to go live, then we turn the cloud component on, we redirect traffic there, and we leave on-prem available for a couple of weeks as a fallback. And then once we're comfortable that that the cloud functionality is stable and good, then we decommission on-prem. And here we are today. So we still have a lot of work to do. The job isn't done, but we're feeling a lot better about where we're going and our plan, and we're very excited to take advantage of the capability in the cloud once we're done with our migration. So thank you for listening. I hope you enjoyed the presentation.